Welcome to Explain the Charts, everyone. Today, September 16th, 2025, we're taking an in-depth look at Intel Corporation, ticker Intel, after some significant news has sent its stock rallying. First, let's set the broader context by examining the daily chart over the past year and a half. Intel has experienced considerable volatility, but it's currently trading near its 52-week high of $27.55, a level last seen in February 2025. The stock's 52-week low of $17.665 was recorded in April 2025, illustrating the wide range of movement in just a few months. While the year-to-date performance shows a healthy gain of around 27%, a longer-term view reveals that a $1,000 investment 5 years ago would now be worth approximately $500.64, highlighting past struggles. However, recent strategic shifts are aiming to reverse this long-term underperformance, and the market is reacting positively. Now, let's zoom into the daily chart to specifically analyze a major event that occurred in August 2025, about 21 days prior to the latest news. Here, we can clearly see a strong bullish surge, particularly around August 14th. This spike was driven by the announcement that the U.S. government converted CHIPS Act grants into a $5.7 billion equity stake in Intel. This deal effectively granted the government 10% ownership, purchasing shares at $20.47 each. Observe the candles from August 11th to August 19th. The stock jumped significantly, with the August 14th candle showing an impressive 8.5% gain. This government investment aimed to support Intel's foundry business, which had been incurring losses. The $20.47 level now acts as a significant long-term support for the stock, as it represents the government's entry price and a floor from which the stock bounced. This event was a crucial turning point, injecting confidence and capital into Intel's strategic initiatives. Expanding our view on the daily chart from the 52-week low, we can see a clear uptrend developing. After hitting $17.665 in early April 2025, Intel began a steady recovery, building higher lows and higher highs. The price action shows increasing investor confidence, even amidst some corrections along the way. This recovery trajectory suggests that Intel's new CEO, Lip-Bu Tan, and his restructuring plan are resonating with the market. The strategy to streamline operations and refocus on core businesses appears to be gaining traction. The $22 to $22.50 area consistently acted as a strong support zone during this recovery phase, confirming buyer interest at these levels. This resilience is a bullish signal, indicating underlying strength despite the prior long-term underperformance. Let's pinpoint the most recent catalyst by switching to the 15-minute chart for September 15, 2025, specifically around the U.S. market open. The news of Intel completing the sale of a majority stake in its Altera business for $3.3 billion, along with a lowered cost forecast for 2025, hit the wires yesterday. Observe the candles starting from 1329 Universal Time Coordinated, which aligns with the U.S. market open, with the stock opening at $24.33. Within minutes, the price surged, hitting a high of $25.29 by 1344 Universal Time Coordinated. This rapid ascent, reflecting a gain of over 4% from the open, demonstrates the market's immediate and positive reaction to the news. The volume during this initial surge was also significantly higher than prior 15-minute periods, indicating strong buying interest. This move pushed INTC close to its 52-week high, establishing a new short-term resistance around the $25.30 to $25.40 range. Following the initial spike, the stock entered a consolidation phase, fluctuating between $24.80 and $25.30. This intraday volatility is typical for news-driven events, but shows that while buyers were aggressive initially, some profit-taking or supply at higher levels emerged. The clear breakout above the $24.50 level on this timeframe confirms a strong short-term bullish reversal. Moving to the 1-hour chart, we can see the broader intraday context of the last few days, offering insights into recent volatility and consolidation. The surge on September 15th stands out as a dominant bullish candle, confirming the strength of the news-driven rally. Prior to this, the stock had been consolidating within a tight range, generally between $24 and $24.50 since early September. This pre-news accumulation phase likely contributed to the explosive move, as buyers were ready to push the price higher once a positive catalyst emerged. The hourly chart also highlights areas of potential resistance around the $24.90 to $25 mark, where the stock showed some hesitation after the initial rally. However, the overall trend on this time frame remains upward, with higher lows being consistently formed. The current trading around $24.77 suggests that the stock is holding onto most of its recent gains, which is a bullish sign. This pattern indicates a controlled upward movement rather than a flash pump-and-dump scenario. Returning to the daily chart for our final overview and predictions, Intel's recent actions are setting a new trajectory for the stock. The short-term outlook is undeniably bullish, driven by the Altera divestiture and improved cost forecasts. This financial discipline and refocus on core foundry operations are positive steps. For the immediate future, key resistance levels to watch are the intraday high from yesterday at $25.46 and the 52-week high of $27.55. A sustained break above $25.46 would likely target the $27.55 level, representing a strong continuation of the rally, with a moderate likelihood of 60%. On the flip side, the $24 to $24.20 zone, representing yesterday's open and initial trading range, should act as immediate support. If the stock falls below $24, the next significant support would be around the $22.50 area, where it found buyers during its recovery phase, which has a low likelihood of 30% unless major negative news emerges. A long-term bullish scenario hinges on CEO Lip Butan's restructuring plan successfully boosting the loss-making foundry business and securing a major customer for its 14A process by 2026. If Intel delivers on these operational goals, we could see a reevaluation of its long-term potential, with a high likelihood of 70% for continued growth over the next 12 to 18 months. Conversely, a bearish scenario would unfold if competition intensifies further or if the foundry business continues to underperform despite government investment and cost cuts. Any failure to meet the 2026 targets could trigger significant downside, with a moderate likelihood of 40%. Traders should monitor news regarding market share in the semiconductor industry and progress in the foundry division. Keep an eye on trading volume. Consistently high volume during upward moves confirms buying conviction, while increasing volume on declines could signal reversals. For swing traders, entering on dips towards the $24 support with stop losses below $23.50 could be a strategy. For long-term investors, the current consolidation after the news might offer an entry point, especially if the $24 support holds firm and positive updates on the foundry business materialize. Remember, Intel remains a highly volatile stock, so careful risk management is crucial. That wraps up our in-depth analysis of Intel today. Make sure to hit that like button and subscribe to explain the charts for more insights.